in so many communities, you can have a great idea, but it's going to take time to build all that. So for me, it's setting up this framework, really kind of understanding that, Rural Workforce Housing Innovation Coalition, the workforce piece of that, there's a lot in that, and so a particular community, can really incentivize people into their community by attracting the investment in, and that's that public-private partnership. Just not doesn't have to be just the public, but what can a local community do to, do that economic development, match the money, and then work with an organization like ours to fill the gaps that are going to come up in that process.
Have you ever wondered what it takes to successfully raise money? I have worked with hundreds of capital campaigns across dozens of industries, and I'm here to share with you proven methods for raising money in record time and at the lowest cost, while also obtaining capital at the lowest price. My name is Carl Dakin, and welcome to Motivated Money. Hello, this is Carl Dakin, and this is the Motivated Money podcast. We're here today to talk about raising capital. And what I want to do today is say hello first to my guest, Jason Nagy. Jason will give us some background about all the interesting things he's doing in just a moment. But for those of you who may be new to the Motivated Money podcast, we're talking about raising capital. And when we talk about raising capital, we're trying to do it in the most elegant, efficient approach possible, because this is pretty much targeted entrepreneurs who are out there going to raise money and other forms of capital for their businesses. And you as entrepreneurs who are raising capital do not have all the time in the world to spend raising capital. You can meet a whole bunch of interesting people, maybe some not so interesting, as you're on the trail for capital. But to keep moving forward, keep focused on our business and our organizations. We want to shorten the money raising process as much as possible. We want to lower the cost of raising capital. And wherever possible, we'd like to lower the price of money that we have to pay for it, so that we have more money left over for those big bonuses that we all deserve for being in charge of our own businesses. So with that, we've got Jason with me this morning. Jason, if you would say hello and share a little bit of information about the Rural Workforce Housing Innovation Coalition.
Yeah, thank you, Carl. You're one person who I did find interesting. So thank you for having me on your show, and congratulations on launching Motivated Money and the program. Yeah, my name is Jason Nagy. I'm from South Bend, Indiana. That's 1/3 of my life. That's my childhood. We won't go there. After that, I did turn to an adult and studied political science, journalism, got the chance to move into Washington, D.C. and follow my passion into the international realm, studying international economic policy, international affairs, and did some international development work. So I worked in the federal government, worked for Export-Import Bank of the United States, got over to the U.S. Trade and Development Agency, and then had the overseas assignment in South Africa. I did some work in South Asia as well. So largely around infrastructure development. And it was to facilitate U.S. commercial interests and try to match that with many different stakeholders in the host countries that I operated in. A very complex, dynamic world, and I learned a whole heck of a lot. Part of it in my mindset now is kind of understanding the systems aspects of everything, getting beyond just the transaction. I know there can be lots of money made in individual transactions, or you could lose your hat in a transaction. So transactions are important. I recognize that, but there's just lots of different goals in working in so-called international development, right? I mean, that's taken it to another level besides local development. So you got all kinds of interest wanting to tap into grant money. And that's where I was managing a grant fund, to kind of really get at the early stages of project preparation and, not just thinking about the transaction, but kind of the institution building that needed to happen for the larger infrastructure to take foot in a lot of the emerging markets. And I was really working a lot on advanced technology, trying to, move beyond the traditional and old to, leapfrog, so to speak, of technology where, that could be valuable and, kind of avoid a lot of other headaches and costs and move into a new realm. So, uh, after that long period of time, that was 10, 12 years in the US government, I decided that I wanted to experience entrepreneurship. I left government in 2014. I moved to Denver. I did have a connection with the National Renewable Energy Laboratory that did help me, move into Denver and really got to thinking about infrastructure here in Colorado and thinking about economic development. And so, yeah, that's where I met you, and had the chance to consider some of the work you were doing with the opportunity zones, which really does bring together the public with the private sector. And here I am on your show.
Yeah. So tell us a little bit about the Rural Workforce Housing Innovation Coalition.
Yeah, so a nonprofit. This is your brainchild, Carl, and I thank you for pulling me into this nonprofit organization. Essentially, the Rural Workforce Housing Innovation Coalition is tackling the housing shortage, right, and doing it with social objectives. It's really looking at low income workers, and so a lot of the different models for how to do that, and that gets into the systems thinking. But the way that it was kind of set up was thinking about the economic driver potential in housing itself, including the technologies. Um, could we launch an accelerator program in a specific place in an innovation district to kind of crowd in um, technology expertise to tackle this economic development need, both to house people, but to do housing better. So I like to think of housing as smart, attainable, affordable, and really, sustainable. And we were even now talking about being regenerative, right? Not just being sustainable, but actually really improving, the area. And there's a whole realm of thinking around this. The aspect that you're looking at is very much to, look at an incubator and accelerator program as part of the innovation district. But, that would be potentially a maker space. And so it's kind of bringing in the partners in this district to make things happen and make things happen well.
So today, what I want to focus on is the concept of a public-private partnership and how that is part of a capital raising campaign, either from the one side of the partnership, which is the private sector, which could be a small business or larger business, and then actually equally so, or maybe more so, from the public sector side, where they need to do something to advance their economic development, which in this case, the nonprofit that you and I are working with is driving workforce housing for rural communities. So, why don't you give me your definition of a public-private partnership, and we'll kick that around a little bit.
Yeah. No, I mean, and traditionally I was taught that this was really about a concessionaire, a special purpose vehicle. And again, that's very much a project oriented activity. That might look at like a subsidy, going into the SPV and then a revenue sharing, back to So it's kind of like recognizing that the public sector doesn't have the expertise, right? And maybe not the financing, and so there's typically the public private partnership was done for infrastructure, for roads, for airports, to just get them done, right? But I have a much broader view of a public private partnership. And I was just in a PPP workshop this week, and kind of pulling my hair out hearing what folks told me is not a public private partnership. But I mean, that is the realm of the additional pieces, like of the training piece. Like, it's an agreement between the public sector and getting the needs fulfilled. And they don't just have to be a physical infrastructure project. There could be really the social needs around education, workforce development, um, addressing a particular problem with water, and so on and so forth. So a hospital, project, has many pieces. It's not just the actual hospital, right? So I think for me, I'm thinking more holistically, just kind of really digging into the community, and financing is really a huge piece of this as well. And that's also what drew me to you, Carl, is your ability to kind of really understand the capital stacking and how to structure a project. And there's a lot that could be done with financial facilities as well, which we can get into.
Yeah. So, for a lot of the audience, who may never even have heard of P3 or public-private partnerships, I'm gonna give it a little bit of context here in that if you're a business and you need to raise capital, there are many, many different types of capital, many different sources of capital. However, within the capital industry, we tend to group them into what we call private sector or private type of funding. But at the same time that we're doing on the private funding, there's a whole nother set of money out there of capital, which is public funding. And in many cases, the public funding is only available to public entities or nonprofits or other groups who fall in special classes. And what happens from time to time is there will be a problem that needs to be solved. And housing is a good example of that. And in order to achieve that goal, though, the government can't do it by itself. The private sector may not be able to satisfy the problem by itself. And this is kind of becomes like a two-legged race where you need two people working together in harmony, the public sector and the private sector as partners in order to accomplish something that's needed for the community, for the public benefit, which both achieves the outcomes that are sought by the public sector, as well as attaining a feasible, sustainable business model that can generate a profit for the private sector. So, what is strange to me in my experience, though, is that I work primarily in the private sector, so I have to know as many types of money and how to get that money and raise that money. And the motivated money approach basically, says know every form of money and figure out which kind of money is the best fit and who the investors are, who are the highest priority to make that investment. But sometimes there's really no one on the private sector that is ready to take an early stage risk or go after a particular goal. And yet there's money on the public side. And yet when you go to talk to people on the private sector, very few of them know about the public money or how to access the public money. And if you go to the public side, it's the same thing. They're like, oh, there's money on the private side. I said, well, yeah, if we did this, with private money, it could complement or match the money that you have or you don't have to move something forward. So that's basically what a public-private partnership is for context reasons. And as an entrepreneur, I want you to think about it is that if you need to do something and you're satisfying a public outcome or objective, then there's a possibility there's money from the public sector. And it could be cheaper money, faster money, or the only available money if you're not finding what you're finding on the private side. So, with that in mind, uh, I know you and I are talking about doing a special higher form of a public-private partnership in an innovation district. Why don't you give us a little bit of idea what that is, and then explain how you see all the different partners working together? How does that basically represent a form of raising capital?
Yeah. Well, we know that, in Colorado specifically, 86% of Coloradans think that the cost of living is extreme problem, right? Uh, so we even have a proposition here in Colorado to look at 0.1% of the taxable income, earmark that for affordable housing. We're going to have a vote on that come election day here. And that would be, another additional, $300 million each year in the state of Colorado to put directly into affordable housing. And there's, specifics around that when you get into a locality about what the localities will have to do over time to increase the amount of, affordable housing in their area each year is by 3%. Now, lots of different communities. And so we're seeing the, numbers and the, the market, let's say, for affordable housing. We know it's there, right? And we have to address the issue. Now, you could just do it on the market. We know how that goes. You can, try to tackle it with low income housing tax credits. We know how that goes. There's, lots of innovative ground, including again, with my interest in the infrastructure arena, starting to tie in the energy, the utilities piece into your housing development. So there's not just housing technology, there's, energy technology, and how to design microgrids and a whole economy around we know with the infrastructure bill, bipartisan infrastructure law, and then the Inflation Reduction Act, you know, lots of focus around green and the social elements to the infrastructure investments. And so there's a whole now of set framework and actual allocated dollars, that would come down from federal into state and then into localities and it's trying to figure out how to be, again, the cutting edge. Just like I was working in sub-Saharan Africa, we call it leapfrog. There's a lot of leapfrogging that needs to be done here, right here in Colorado. And so there's a lot of technology, energy storage technology, really advanced, solar technology. And bringing that into fruition it really, I think, deserves in Colorado a defined innovation zone, right? And then starting to think about how to put these pieces together to really solve this, a lot of the social challenges and environmental challenges. And then it's a building a workforce around that, the new integration of all of that. And so, it's the whole bringing the higher education system, the research dollars. Again, that's another aspect too. A lot of people think of entrepreneurship just only on right now in the market, but really we've seen how, there's the CHIPS bill is another, major investment into, industrial, industrial policy and industrial economy that is coming down. And so that is going to roll through your public university systems and then, so there's just a whole network that has to get, um, engaged. And what better way to do that than to brand a very specific place and really tackle that together here.
Yeah. So, as I was describing, there's a bit of a silo around the private sector, there's a little bit of a silo around the public sector. And yet, when you get in the housing area, it's almost impossible to build a house without permission of the government, permission of the community. And that's reflected in zoning and planning and building permits and so forth. And yet, I still know entrepreneurs who go to battle every time they want to submit a permit. That they have to like stretch it, bend it, fight for it, and it's not a working relationship. It's a battleground. And yet, even within the building community, then as you were describing, we have one group of builders who are going for subsidized housing, going after tax credits and so forth. We have another group that's going after the high end, high profit, high margin type housing. And what that's left is what they're now called the missing middle, which is where workers and low income workers fit into the spectrum. And there, there's only so many things that we can do. But from again, a public private sector, we're going, well, one of the things we can do is train these workers up, give them more skills, allow them to generate more income, which means they can afford a more expensive house. We get them a little closer to the cost of housing today. On the other side, uh, we're talking about driving down the cost of housing. And one of the challenges I've seen with housing is that a lot of the numbers are based on the cost of the house, but they totally skip over the cost of the utilities. And so also when we go into a community, say we want to develop a housing project with multiple houses, we have to look at the entire infrastructure because we may overburden or tip over the current capacity of a wastewater system or a power system or something else. And it's interesting to be able to step back and get that truly holistic look of a community. And at that point, it seems like public-private partnerships are not just helpful, they're required, and they're the best tool in the toolbox for doing something. And um, again, to make a point to an entrepreneur is if you're doing something that advances a goal or mission of a government agency, then you are potentially a support vendor to them. You are a potential partner. You might even lead the project for the benefit of the local community. And that's a good thing. And you may find that the money and resources, not just money, but all kinds of resources, they may bring to you demographic data. They may bring to you experts in planning. They may have access to different types of specialty funds, grants, and so forth. And all these are resources which may not exist on the private side, or they're cheaper on the public side. And you have to learn how to engage and partner and go through the process. And I'm not saying that's simple. I can almost guarantee you it's not simple. Um, but it changes the dynamic. I was talking with a company yesterday that has a new type of recycling technology. And this is something that probably will prove to be very valuable to the government, particularly in cleanup and situations like that. And if they apply for what's called a small business innovation grant, SVIR program, they can get cash to advance the development of their technology without giving up any stock. So it's an anti-dilutive form of capital. And quite often that money is available when a venture capitalist will look at it because they don't understand who you are, or an angel investor may not look at it because you too early in the life cycle of what you're doing. But because of the great potential benefit to the public, in this case, the federal government is making money to small businesses to move that technology forward. Um, so, there's so many different ways to talk about public-private partnerships. We could do it for weeks uh, about the elements and so forth. But right now, as you're looking to put together something on rural housing, who would you identify very quickly as potential partners that you want to team with to move towards your mission of building more housing?
Yeah, so I really, really, put the emphasis on that place-based and really getting to know the community, really engaging the community. And so they're already, and that's not going to be, I'm floating around here and there. I was floating outside of Colorado for a long while. And so, that depth of knowledge, it really is kind of partnering with, some of the key, local institutions. And I have found, them trying to bridge that federal into the local. I have found that the economic development organizations really offer that great potential because they're always getting asked, and part of the attraction and retention aspects of things and understanding, the land availability and all the politics in a local community to the greatest extent that they've been around. So I think it's that bridge for the, at least the Rural Workforce Housing Innovation Coalition right now. Is kind of really thinking about that economic development strategy and the PPP framework within that organization and what we could do to negotiate the next step. And it really, you talk about milestones, Carl, that's really what it's about. That those baby wins of just getting a foot in the door to get acknowledged. Number one, be heard, and then to me, it's that local engagement from that. So I think that's the steps. Those are the steps to really get to understand the community, and then not come prescriptive into a community, but really, engage early on. Because there, like you said, there's so many opportunities to do things. You really don't need to come in prescriptive if you've got a wealth of, network and ability to bring those pieces in.
Yeah. So within the motivated money approach to raising capital, one of the keys is identifying stakeholders, people who will stand to benefit from the success of your organization without making an investment. And within a public-private partnership, each of your partners is going to clearly meet the definition of a stakeholder. They may have money, they may invest, and that makes them the perfect investor candidate where you're both working towards the same outcome, and they can bring some of the resources you need in order to get to that outcome. And this all becomes more important right now because we have a lot of money that is coming down through the federal ranks out of the infrastructure bill, and then the new Inflation Reduction Bill for primarily that environmental situations. And in many cases, we'll find it where, yeah, if we can make a house consume less electricity, or it can generate its own electricity, and thereby give the option of not using fossil fuels. And if it can store its energy so it doesn't have to be connected to the grid, and just the ongoing list of all the things can be done. They're just environmental. And then from the city standpoint, if you don't need to put in those extra power lines, if you don't need to build a brand new sewage lagoon for handling the waste treatment, we're saving the cities money and we're allowing them to grow at a lower cost and overall having a better environmental impact. So, um, as we're thinking about that and also thinking about upcoming episodes of the Motivated Money podcast, one of the things we're going to be talking about is the recession, the big R word. Depends on who you talk to. We're in a recession or we're entering into a recession. And some of the projections are entering into a major recession over the next 6 to 12 months. And again, partnerships like we're talking about today can be a stabilizing influence. And in times of turmoil, chaotic capital markets, you may find a relationship with a public entity to be the difference between survival and failure, or making a profit or just breaking even. And survival is just it's no fun. So we'd like to do better than that. Uh, what kind of things do you think that you can get out of your partners? What can they bring to the table, and any form of capital, not just limited to cash?
Well, I can get really creative, Carl. I mean, I'd for me, like I'm really, you know, ultimately just trying to really the solve problems in my network, right? And that's where, with you, uh, I was attracted to you because it was in that opportunity zone realm where, um, these were areas that were not designated, over time, they were designated actually now as, need-based communities, right? That were historically disadvantaged and not invested in. And so it was kind of a crowding in factor. And it's that kind of aspect. I mean, I feel like we are, in this public expenditure realm, which hopefully will keep us out of recession. I mean, these dollars do take time to come down. So it's that long planning process, knowing that I was working infrastructure and, the time that it took. And just as you said, from a zoning standpoint, to get a housing development up, what the time that it takes to get that entitlement to be able to move forward. Um, so, the organization, the coalition, one aspect that we talked about was, actually working on the standards to be facilitate third party role in, being able to, analyze and move quicker on developments. And, there's a science-based approach, there's the shortcomings in the local, municipalities. It's kind of like where should that be? Should there be a state role for that? Or should there be a third party role? And so, like with the Colorado Housing Finance Agency, that was created for a very specific need at a very specific time. And so, in our engagements together and individually as we go, out and here, we're asked to do so much, right? There's needs everywhere. And so that's why I say, as I go into a community, uh, uh, I hear more about, okay, well, yeah, the federal dollars coming down, but what about the workforce to actually do it? And we heard from ICT companies, there was so much ICT money that entities were qualifying for, and then they couldn't actually perform the work because they didn't have the workers. And so that gets back to kind of that housing. I'm glad we're really prioritizing the housing, um, because in so many communities, you can have a great idea, but it's going to take time to build all that. So for me, it's setting up this framework, really kind of understanding that, Rural Workforce Housing Innovation Coalition, the workforce piece of that, there's a lot in that, and so a particular community, can really incentivize people into their community by attracting the investment in, and that's that public-private partnership. Just that doesn't have to be just the public, but what can a local community do to, do that economic development, match the money, and then work with an organization like ours to fill the gaps that are going to come up in that process.
Well, and that's the point that a lot of people don't realize. But if you roll into town from out of town and you start talking about, hey, we've got a way to reduce the cost of housing, we're going to have to use some new technologies and so forth. Almost across the board, these communities are currently underfunded, understaffed, and it may not have any personnel that are familiar with any of the latest and greatest technologies, which are actually the path we're working towards to lower the cost of housing. And so you come across gaps like this, and you start filling the gaps. Um, it's another way of talking about what are the benefits of a public-private partnership is that the private sector can look for money, obviously, but it also can fill the gaps. It can be a resource to these communities who need more help, more expertise. You may have, if we're working with multiple communities, you can take your costs and spread it out over all these communities. They don't have multiple communities; they're only one at a time. So if they bear the cost themselves, it's a one-off and it's more expensive. So your economies of scale from private sector, and even from a nonprofit role and trying to help all these communities, it's just one more way of trying to get to the objective and do it simpler, quicker, faster, knowing that we do not have an unlimited amount of money and we do not have an unlimited amount of time. So this is all good, Jason. I really appreciate your time today talking to me about public-private partnerships. I'm sure we'll have you on again in the future when we start drilling into innovation districts and how to implement those. I've had a number of conversations this week with different communities who need to stand up a brand new industry. And my personal opinion, my professional opinion, I guess it is that innovation districts may be one of the better tools in the toolbox for making that happen. So what we're going to do now, for those of you who love to do homework in between episodes of the Motivated Money podcast, is stop in what you're doing as a business, as an entrepreneur, and start asking yourself how your services, your products, the success of your business is helping your community, and in particular, the local economic development, which is working to enrich the quality of life for everybody within your community. And then reach out to find out who your EDO, your economic development organization is, either in your city or your county or the state, and talk to them about who you are and what you're doing, and see if there isn't a groundwork for you to become a partner in a public-private partnership. And this relationship not only can create an expanded market for you and potential greater stability through a recession, but there could be a host of all other kinds of benefits that go beyond that. So um, give that some thought. Get out your pen and paper or your laptop, whichever technology you're using today, and that'll be your homework assignment till our next episode of the Motivated Money podcast. So, Jason, thank you very much. I'm glad you were here with me today, and we'll see everybody at our next episode. Take care.
Thank you for listening in to Motivated Money. If you like this or any other episodes, make sure to leave a rating and review the show. We love to hear your feedback and want to make this the best possible show for you. Also, if you like this episode, make sure you share it with someone you know who is seeking to raise capital. They will appreciate learning what you now know about raising funding. I'll see you on the next episode of Motivated Money.